Developing a sense of the market. Trading has become a fun and profitable hobby for many people who have never done it before. Wise investors know they can't get the kind of returns on their money with savings accounts and certificates of deposit that are possible with stock and option trading, so they are turning to trading on their own. There is much to learn about trading, including words and phrases unique to the financial industry. Today, the average individual has access to an incredible amount of stock-related information, educational resources, and tools such as technical analysis, much of it free on the internet. In addition to the evaluation and research you may do on a potential stock or options trade, you need to gain a sense or an awareness of the current condition and trend of the stock market as a whole. This is often overlooked by retail, individual traders, especially those who are new to trading. The overall market conditions can affect any specific stock you are considering to trade. Before we dive in, please take a moment to like our video and subscribe to our channel. There are several important factors that affect the market as a whole, interest rates being one of them. High interest rates can make it more expensive for companies to borrow money, which can affect their cost of doing business. Volatility is another factor that drives the market. The VIX, or the Volatility Index, calculated by the Chicago Board Options Exchange, the CBOE, is sometimes called the Fear Index, or Fear Gauge. The VIX is a popular measure of the crowd's expectation of volatility based on S&P 500 index options. When the VIX is trending down, buyers will begin to step in. This means you should never short the market when volatility is dropping. When volatility is high, it's time to sell options to capitalize on good income from high premiums. You can see a free chart of the volatility index online at www.marketwatch.com/investing/index/VIX. The futures market is a good indicator about the direction of a day's predicted trend. The futures market trades various securities such as crude oil, natural gas, corn and wheat, currency, precious metals such as gold and silver, and U.S. Treasury bonds. There are 4 futures that can move the whole market, because of their high liquidity and their great leverage. These are the futures for the Dow 30, the Nasdaq, the S&P 500 and the Russell 2000. After you have a sense of where the market is likely to go, you can drill down to specific sectors and see what's hot. One free place on the internet to find the current trend of market sectors is at finviz.com. Typical sectors include technology, real estate, healthcare, industrials, financials, energy, utilities and others. Consider this. You may have a favorite football team, and follow the team closely. While it's not your focus, you most likely still have an idea of what teams are better or worse than your team. You probably know where your team currently stands in relation to the other teams, even though you don't necessarily follow other teams as closely as your favorite one. Similarly, although you are concentrating on one particular stock, you should watch those factors that move the overall market. Get a sense of whether the market in general is bullish, bearish or neutral. Typically, you'll want to go with the trend. It's like the weather. You'll want to know what to expect later in the day when you head out in the morning, so you'll be prepared. So, before making a trade on a particular stock, get a sense of the overall market and the particular sector your stock falls into.